Hello, this is Jackie Ferenz with Avalon Risk Management, your premier provider of insurance and surety solutions for the transportation industry. In our last episode, we began our discussion on the importance of having a formal carrier selection process and how this can mitigate your risk when choosing carriers. The focus was primarily on developing your own framework and available data elements that can be considered. In this episode, I'll move on to the second part of this discussion, covering the documentation and insurance aspects. Your carrier selection process should also encompass a verification and review of the motor carrier's insurance. While you can see a record of a carrier's auto liability insurance on the SafeAssist website, the data is not always accurate. Additionally, the motor truck cargo insurance information has not been updated since 2011, when the FMCSA eliminated its requirement that carriers maintain this coverage unless hauling household goods. Instead, most transportation brokers require that a signed insurance certificate be sent directly from the motor carrier's insurance agent showing the broker as a certificate holder. The carrier should have the proper types of coverage and adequate limits. For auto liability insurance, the regulations require various limits, from $750,000 for those hauling general property up to $5 million for carriers that move hazardous materials. Detailed requirements can be found at 49 CFR 387.303. For motor truck cargo insurance, the limits should be sufficient to cover the value of the loads being hauled. When possible, you should attempt to verify what the policy covers and what is excluded. Exclusions for theft from unattended vehicles are commonplace, as are restrictions on certain commodities like electronics. Most truckload carriers do not limit their liability, but are instead open to full CARMAC liability for loss or damage to the property that they haul. Without adequate cargo insurance, even though the carrier may be likely be liable for a loss, many will not have the financial wherewithal to pay claims out of pocket. With both auto liability and motor truck cargo coverage, beware of the scheduled vehicle policies. Any auto policies are preferable, as with coverage written on a scheduled vehicle basis, it's necessary to verify that the truck and trailer that will haul the load are actually listed on the vehicle schedule. In addition to auto liability and motor truck cargo insurance, you should be certain that the motor carrier maintains workers' compensation coverage. Hiring carriers without workers' compensation insurance can expose you if they are injured while hauling the load that you arranged. At audit, you can also become responsible to pay premiums to your own workers' compensation insurer for hiring uncovered carriers. In most states, their payroll is assumed to be 1/3 the cost of hire. Finally, as a group, motor carriers that purchase general liability insurance may be more financially sound than those who do not. While general liability insurance does not cover auto losses, cargo claims, or injuries to your employees, the theory is that since the government does not require that this coverage be purchased, those that do buy it may have more in the way of assets to protect. This is a broad generalization, and there will, of course, be exceptions. Active brokers who utilize a large number of carriers may wish to outsource certain aspects of the carrier selection process. There are services that verify operating authority, collect and maintain certificates of insurance, and perform other various activities. In these two episodes, you heard a lot about the importance of having a formal written carrier selection process and sticking to it. We covered some of the things that you may want to include in your own framework. We've really only scratched the surface, however. We could fill a whole series of videos with this topic alone. You should consult with a transportation attorney when creating your carrier qualification process. There are some great resources available as well. If you're a member of TIA, the Transportation Intermediaries Association, you already have access to their carrier selection framework. This regularly updated document provides approximately 50 pages of analysis regarding some of the things we touched on today and more. It can be a valuable tool when creating your own carrier selection process. In our next episode, we'll take an in-depth look at the problems of fraud and cargo theft in domestic transportation. Thanks for watching.